In an unpredictable financial landscape, how can you stay one step ahead?
Join renowned market experts Joseph Wang, Nicky Shiels, and others as they break down critical trends that could redefine your investment strategies.
Using cutting-edge AI technology, we've condensed hours of analysis into concise, actionable insights that save you time.
Prepare to navigate 2026, armed with the knowledge you need to make informed decisions amid market volatility and emerging opportunities.
Today, we are analyzing recent market trends, drawing insights from Joseph Wang, who provides a comprehensive look at the economic landscape as of January 10, 2026.
Joseph's analysis emphasizes significant volatility in the markets and the role of interest rates in shaping investor behavior.
Joseph Wang identifies inflation as a major factor influencing market stability, leaving investors on edge.
He notes that rising prices and geopolitical tensions are intertwined, significantly affecting global markets.
Joseph Wang explains that we can expect further increases in interest rates this year.
He articulates that these higher borrowing costs may restrict consumer spending and overall economic activity.
According to Joseph, actively managing portfolios will be crucial in navigating these uncertain market conditions.
He also advises that diversification across various asset classes can help mitigate risks associated with volatility.
Joseph highlights the critical role of geopolitical tensions in shaping market dynamics.
He suggests that ongoing trade negotiations are essential for maintaining economic stability in an unpredictable environment.
What does Joseph Wang predict for the market outlook in 2026?
Joseph predicts that markets could experience greater volatility in the near term, cautioning investors to prepare for potential downturns.
Joseph emphasizes the importance of active portfolio management to navigate current market uncertainties.
He also suggests staying informed about geopolitical developments as they could have immediate impacts on market conditions.
Moving forward, investors might consider reallocating towards resilient sectors to weather predicted volatility.
It's evident that understanding both economic and geopolitical factors is key to successful investing in today's landscape.
Today, we are discussing Fannie Mae's recent commitment to invest heavily in the mortgage sector.
This investment could significantly impact the real estate market.
Analysts believe that increased investment from Fannie Mae could influence many sellers to take action.
This might result in a surge of listings, which could significantly change current market conditions.
Analysts suggest that Fannie Mae's strategy aims to make mortgages more accessible.
This initiative directly addresses recent market challenges.
Concerns have been raised regarding how the increase in home supply due to seller activity could affect pricing.
If sellers list their homes proactively, it could ultimately benefit buyers.
Analysts predict that varying investor responses could influence market dynamics.
These shifts are critical for understanding future prospects in buying and selling homes.
Predictions indicate potential volatility in the housing market stemming from these changes.
If executed correctly, this could lead to better options for buyers moving forward.
In summary, buyers must closely watch market developments.
Sellers should also think strategically about their selling timing.
Today, we are diving into Scott Horton's analysis regarding the housing market from Eurodollar University.
Scott offers a comprehensive overview of the housing sector's challenges, emphasizing elevated interest rates and inflation.
Scott Horton highlights that higher interest rates are cooling housing market demand.
He indicates how inflation impacts both buyer purchasing power and construction costs, contributing to a challenging environment for homebuyers.
Scott notes that rising interest rates have made mortgages costlier, reducing affordability for potential homebuyers.
He mentions a noticeable drop in mortgage applications as buyers reassess their financial capabilities. Scott emphasizes that inflation is significantly escalating costs for construction materials and labor.
Does this indicate that home prices will remain high despite decreased demand?
Indeed, Scott concludes that sustained high costs will keep home prices elevated, independent of demand shifts.
Scott suggests that housing sales could continue to drop if economic conditions do not improve.
He warns of potential price volatility in the housing market as it adapts to ongoing economic changes.
Scott advises potential buyers to be cautious and consider holding off until the market stabilizes.
For investors, he recommends reassessing strategies and concentrating on long-term rather than short-term considerations.
Today, we are diving into an analysis of the precious metals market with insights from our expert analyst.
In this discussion, the analyst outlines vital trends affecting gold and silver prices.
The expert analyst suggests that rising consumer demand is reshaping valuations of precious metals.
Recent economic indicators appear to suggest increasing interest in investing in gold and silver. The analyst emphasizes increased consumer interest in gold and silver.
They highlight that both retail and institutional demand are significant factors influencing market dynamics. The analyst notes that inflation concerns are significantly boosting demand for precious metals.
This drive for safety during periods of market volatility makes gold and silver appealing investments. The analyst recommends focusing on long-term holdings of precious metals as a strategic move.
They suggest that diversification into precious metals can stabilize an investment portfolio. The analyst predicts that gold is likely to appreciate in value over the next 6 months.
They also forecast that silver may experience disproportionate gains, driven by increasing demand.
In conclusion, the expert analyst advises that investors need to carefully consider market dynamics before committing to precious metals.
They should also monitor economic indicators that may influence precious metal prices.
Today, we are discussing insights from Nicky Shiels regarding the outlook for gold and silver prices in light of evolving global economic circumstances.
Nicky believes that inflation and global tensions could drive gold to $5,400 and silver to $90.
Nicky Shiels explains that current inflation could lead to significant increases in gold prices.
David Lin suggests this trend corresponds with historical data from wartime economies. Nicky explains that inflation is a significant factor in the rise of gold prices.
She also notes geopolitical issues often push investors toward gold as a safe haven. Nicky points out that demand for silver is also expected to drive substantial price growth.
In a high-inflation environment, silver could become a more attractive hedge for investors.
What does Nicky Shiels project for gold and silver prices in the coming years?
She predicts that gold could hit $5,400 and silver could reach $90, dependent on inflation trends.
Nicky concludes that transitioning to a wartime economy suggests that gold and silver could serve as financial protection.
David highlights the need for ongoing awareness of geopolitical situations as they relate to these investments.
Today, we explore recent economic proposals that could reshape the financial landscape.
Significant shifts in property tax policies are being discussed, which could change how investments are approached.
Current discussions suggest that tax changes could invigorate the housing market.
An uptick in disposable income might lead to further investments by homeowners.
One pivotal topic is quantitative easing. What are its implications for investors?
Generally, quantitative easing is expected to lower interest rates, making real estate borrowing more feasible.
How should investors approach these policy changes?
It's imperative for investors to realign their strategies in preparation for the economic shifts.
With these changes, what lies ahead for the housing sector?
Analysts predict that tax reforms could increase home sales, although the market may experience volatility during the transition.
As we wrap up, it's essential for buyers and investors to navigate these economic changes carefully.
Understanding the new tax implications and their influence on market dynamics is vital for making informed decisions.
Wow, what a crucial set of insights we gathered today.
Absolutely. Each expert brought a wealth of knowledge. For instance, Nicky Shiels predicts gold hitting $5,400.
And Scott Horton painted a rather grim picture for the housing market, right?
Exactly. He underlined the real challenges, especially for prospective buyers. But the upturn in gold and silver prices is also tied to these economic conditions.
That's a great point. Yet, it's intriguing how opinions diverge on the speed of these market changes.
Yes, like Nicky's optimistic prediction contrasted with the more cautious views from other analysts regarding timelines and influences.
So it seems inflation and geopolitical tensions are common themes, yet each expert offers unique takes.
And that's what makes economic discussions so compelling. There's always more to explore.
If you found today's discussion insightful, make sure to like, subscribe, and hit that notification bell.
Your engagement empowers us to bring you more expert analyses like these.
Don't forget to check out our next video on the intricate dynamics of global trade. It's going to be a must-see.
See you soon, everyone.